And the data says that over the last year, that correlation is broken down. Over the last year, the correlation between gold and silver prices actually dropped to about 0.2, which is almost no correlation at all.
This week's special with Miles Franklin Precious Metal Investments. 2021 Silver Krugerrands for only $365 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today, our good friend Lobo Tiggre from the Independent Speculator. Lobo, thank you so much for your time today.
Thank you, Elijah, and honored to be considered a friend.
There we go. Definitely. You're a regular on this show, and our viewers much appreciate these interviews. Now, one of the topics I'd like to discuss today is how major investors are moving into gold. This is a trend we've seen even at Miles Franklin, where Andy Scheckman on our last interview had been saying that, he's been receiving giant orders lately, six-figure orders. And one of the things that you just reported on is how a major software company is actually investing $50 million in gold. So your perspective, is this a start of a trend?
I'd like to say yes. That would be the, woohoo, happy, happy, joy, joy answer here. But forgive me, it's not my job to be a cheerleader and say, yes, this is it. We're going to the moon tomorrow. I don't know. It could be. My point really was that it was a significant event. And unlike the Michael Saylor moment of Michael Saylor's software company putting a large chunk of its treasury into Bitcoin, this was actually a fairly prudent, reasonable, moderate move on this company, Palantir, on their part to harden their balance sheet, not just strengthen, but harden their balance sheet against unknown black swan events in the future. So 50 million for a company that big, it's actually pretty small. It's not this giant risky move. They didn't put their company at risk if gold suddenly drops 50%, which is maybe less likely in gold than in Bitcoin. But it's nothing like that. So I think it's significant because it's not just gambling because I'm a true believer in gold or something. It's actually a prudent move. Some CFO said, you know what, let's take out a little insurance here. And will that be the pebble that starts the avalanche as a gold bug? I sure hope so. I think that would be great. Will it be? I don't know. But it does seem to me that it's a sign of the times, that a prudent company could make such a move is a good thing. And I won't wax too rhapsodic about this, but I want to bring up, I know that you've talked to Rick Rule in the past, and one of his favorite things to mention on this subject is that historically, over preceding decades, the average allocation to gold as a safe haven asset in global financial assets has been around 2%, and that currently it's about 0.5%. So if allocation, this insurance allocation to a safe haven asset were just to revert to the recent historical mean, it would quadruple the investment demand for gold, which obviously, would send it off to the races price-wise. So I'm not predicting that would happen, but I think this is really interesting because, up until now, Rick's been saying this for a long time, and there's been no indication that anybody's listening. There's been no indication that any mainstream companies, not gold bug companies, but normal companies, are even thinking about it. And if this is a sign of a change in that way, it doesn't even have to revert to that mean. If it were to just go to 1%, it would double the investment demand for gold. And what would that do to the price? So I'm not promising the moon here. I'm saying watch this space. If it does catch on, I think it portends big things.
And what are some of the signs then we would see that it would catch on?
We'd see other companies doing similar. And it wouldn't be, the Keith Neumeyers of the world holding back silver and so on, and God bless him for doing that. I'm not criticizing that. I'm just saying, of course, he's good at, somebody like that will do it. He's a silver company CEO, right? So if some other technology company, or if Coca-Cola or somebody like that decided, you know what? Or hey, here's an idea. What if Warren Buffett, who has dismissed gold as a pet rock for years, what if his company, Berkshire Hathaway, were to buy a gold miner? What would that do? Well, we saw what that did last year. Very interesting. So who knows? Maybe things will take off. But that's the thing to look for. Look for mainstream, not gold bug companies. Look for mainstream players taking out a little bit of insurance in gold. If that becomes a trend, that trend will be our best friend.
You mentioned how there's a lot of investors moving into gold, and gold is becoming more mainstream, and there's the potential for it to become even more mainstream, right? But silver has become, as you mentioned, it seems like not seen as much as a monetary metal, which is kind of interesting because we've talked about this on the channel before, how silver historically has been actually more of a monetary metal than gold. So what is actually happening there?
So this is the one that gets me a lot of hate mail right now. I am a silver bug. My stacks of silver are bigger than ever. I'm not bearish on silver at all. People respond to the headlines and think, oh, they're bashing silver. I'm not bashing silver. In the first place, every silver investor, it's your own risk if you ignore the data. First place, I'm just presenting data, okay? So don't get mad at me. If you want to get mad at the data. And how much sense does it make to get mad at the data, right? Okay, and the second place, actually, I don't know if we've talked about it before, but I know that I've talked about this before. People have been saying for years, silver, it's not really a monetary metal anymore. It's just an industrial metal. And I've always said, no. You look at the price action and, okay, yes, silver has a lot of industrial uses. But on a day-to-day basis, on a month-to-month basis, on a year-to-year basis, you look at the charts and silver moves with gold. The correlation is very high. Historically, since the gold and silver, gold price specifically was freed by Tricky Dick Nixon in 1971, right? Historically, the average is close to 0.9 of a correlation, an extremely tight correlation. And okay, sometimes the ratio between the two opens and closes, but they tend to move the same direction 90% of the time. And so people have been saying, silver is becoming more of an industrial metal, and I've been resisting that. I've been saying no. But I pay attention to the data, and the data says that over the last year, that correlation is broken down. Over the last year, the correlation between gold and silver prices actually dropped to about 0.2, which is almost no correlation at all. It's a massive drop. And if you think about our experience, just watching these prices on a day-to-day basis, I'm sure that you and the audience, we've all looked at this as like, wow, gold's up today, but silver's off. Or silver's up today, but gold's off. We've seen the relationship break down anecdotally, experientially, or heck, that big flash crash we had a couple weeks ago when gold and silver got whacked on a Sunday night, right? And gold came back that very night and recovered, went on to recover. But silver didn't. It's remained low since then. So they're behaving differently. And that's really all I'm saying. I'm not saying silver is this, is not that. I'm saying the data says something has changed here. And that is worth thinking about. Now, what does it mean? Okay, here we get into hypotheticals. And the data does suggest that the market, for now at least, is looking at silver more as an industrial metal. And what I've posited, what I think we should think about, the so what is that, as stackers, we don't care. I just want to have my silver. But as a speculator on the stocks, I need to know where the price is going to go or where it's likely to go so I can invest accordingly. And what I'm suggesting is that the data is telling us that silver might start tracking copper more closely than gold. It's used in the electrification story. Its industrial use case is actually very closely tied to copper. And we've seen the market now sort of separate and treat silver more like an industrial metal than a monetary metal. Like my objection from before is, no, look at the charts. They're going the same direction. That's changed. Now, maybe it's not permanent. Maybe this is a flash in the pan. But it is something to watch for, because as speculators, as stock investors, we need to know what the trends, what are the drivers in the trends. So I'm saying to watch out for that.
With respect to what this really means then for investing, you mentioned how, silver is, you still have a huge silver position, more silver than you've ever had in the past. Does this really impact maybe the ratio of gold to silver people who are stacking should buy? Like, how does this really impact the investing situation for both gold and silver?
The immediate take is no, actually. I'm still very keen on accumulating more silver. If I can find great silver stocks in particular, the stocks are really hard to find really good ones. Most of them have warts of some kind. And of course, as you and probably most of the audience understands, most silver is a byproduct, right? A pure silver play is very hard to find. And in the so-called pure silver plays, it's really a lead or zinc mine that has more value in the silver than the lead or zinc. You can find native silver here and there, but nobody mines just pure silver, or not in quantities. So for now, nothing really changes. And as I said at the beginning, I'm very bullish on silver. I do think that it still has its monetary component. Investment demand is still a huge part of annual demand. It may go away in time, but right now it's really important. Somebody asked me recently, well, what if we took out the investment demand and we just looked at silver price on the supply and demand fundamentals as an industrial metal? And I said, you wouldn't want to do that, because if you took away the investment demand right now, that would take a large chunk of silver demand on an ongoing basis away, and it would be bad for the price. So immediately nothing changes. I'm bullish. I think in the mania that I still expect ahead for gold and silver, that we could see triple-digit silver prices. Not promising that. I think it's possible. And so I want to have the best silver plays that give me leverage to that upside I see in silver. But farther ahead, the implications are actually two different ones. One is after the monetary metals mania, after the gold and silver bull really goes into its manic phase, silver might do better than gold going forward, because the industrial phase will still be there. Gold has its industrial uses, but they're really quite a bit more limited than silver's. So actually, this is a longer term, more bullish outlook for silver, because I think the industrial case supports it more going forward. But the other thing, though, is if it becomes more priced as a monetary metal and fewer investors, institutions look at silver as a monetary metal, that changes things. In particular, banks used to have silver, and now Basel III, like gold is a tier 1 asset, but not silver. Governments used to have silver hoards, because even when they took silver out of circulation for some decades, there was always, this fear that they might be forced back to it, so they held it. But then, that went away. Governments have dishoarded silver. And where I'm going with this is, imagine a future world in which the fiat currencies that you and I are so skeptical of, and I imagine the audience, sees them going the way of the dodo when the emperor is revealed as having no clothes. If that actually happens, and we go back on some kind of gold standard, I think this emphasis of silver as an industrial metal means that there's a good chance it would not be a bimetallic standard or trimetallic. We wouldn't have gold, silver, copper coinage, and we wouldn't necessarily have gold and silver coinage. It might be just gold coinage, partly because silver is seen more as an industrial metal, and partly because distributed ledger technology makes it easy to transfer gold in large or very small quantities. So you don't need silver to make change anymore. And that's a big argument we can get into, but that's the short version, is just that silver historically was monetary metal in part because it made change gold, which was too much value concentrated to be practical for many transactions. If that's changed, then we may not see silver go back into circulation as money. So the implication of that longer term is, like, how much do I want to stack? If I think the world will actually go back to using something that's real for money, then for that long-term outlook, I want to stack more gold than silver. Physical, bullion I'm talking.
Now, what kind of implication would this have for the gold-silver ratio? Because if we look at previous bull markets, the ratio falls. 1980, it went to 16 to 1, 2011, around 33 to 1 or around there. So if it gets to this where gold is remonetized, but silver is not, would we just be in a world where the ratio stays high like it is right now, 75 to 1 or even higher?
Yes. Well, let me rephrase it this way. Another common ratio people look at is the gold to oil ratio. Now, the world is electrifying. Whether it should or not, and whether governments should subsidize it or not, it's happening, right? We're going to electric cars. What the gold to oil ratio going forward, other things being equal, it will never be what it was historically again. If the world no longer burns petroleum products in vehicles, starting in decades down the road, basically that ratio will become a historic artifact. So, and analogously, if the world goes to a new gold standard, but it's not bimetallic and silver's not part of that, then the historic ratio There's no reason to expect that to endure. Now, no, I'm not saying therefore silver's going down or silver's bad or whatever. I'm just saying it's going to march to the beat of a different drummer. And the natural occurrence difference in the Earth's crust, I don't think that would define it. And the monetary use, I don't think that would define it. I think if gold goes back into use as a gold standard, it becomes really stable. Its price, or its exchange ratio for other currencies becomes really stable. But if silver is primarily an industrial metal, its price will tend to fluctuate more. So I'm not predicting a specific gold-silver ratio. I'm saying that the gold-silver ratio may be less useful and more volatile, as if gold settles down as money and silver continues to trade up and down as an industrial metal.
One of the other metals that our viewers are keenly interested in is platinum as well. And one of the big arguments for that right now is that platinum is just above, half of gold's price. So normally platinum is above gold's price. Now, do you think that kind of platinum gold ratio will become an artifact as well, and we might more permanently see platinum below gold's price if gold is remonetized?
Our friend Rick Rule likes to say that low prices are the cure for low prices. And people look at platinum being below the price of gold and say, oh, that's a low price. It should be cured by itself, right? I don't think so. I think it fits in the kind of thing we're talking about. If the use case for platinum, which is largely industrial, yes, there is some monetary aspect to platinum. And if you look at gold, silver, platinum, and palladium on a day-to-day basis, or at least until recently when silver's, the correlation broke down, all four of those would tend to wiggle in the same direction. The more industrial metals would respond to news differently. But if the so-called precious metals were going up, all four of them would tend to go up at the same time. All four would tend to go down at the same time. So there is some of that there. But clearly platinum and palladium almost entirely driven by the industrial demand. And that's why, apart from the day-to-day knee-jerk changes, you would see those price trends change dramatically, and why palladium has done so well in recent years as an industrial metal with supply constraint, and why platinum has not done so well for years as an industrial metal with demand constraint. So no, I don't think there's any reason, particularly with the electrification of transportation going forward, to be especially bullish on platinum going forward. The fact that it's cheaper than gold does not mean it has to become more expensive than gold again. And this is a good reminder for silver bugs too, because platinum is more rare than gold. In the Earth's crust, platinum is objectively a fact. It's more rare than gold. So how can its price be lower? Well, the price isn't set by rarity in the Earth's crust. The price is set by, in an industrial case, like a metal like that, it's set by supply and demand on its industrial use. So, don't get hung up on these ratios. They're not magical. Whether it's God or the universe wrote them in the Earth's crust, yes, that's real. But it doesn't mean the market has to value them that way.
Now, one of the last topics I wanted to discuss is what you recently wrote about how we've seen these, essentially the mainstream narrative is that because rates are so low right now, the only alternative for investors are stocks. And that's why we're seeing this huge increase in stock prices recently. Now, your perspective is stocks are not the only alternative. And why do you believe that?
I'm glad you bring that up, because first and foremost, this new acronym that's really been buzzing my ears off over the last week or two, TINA. There is no alternative, TINA. People just say this like it's a fact, like it's written in the cosmic firmament. And it's just not true. But it's what they used to justify chasing high, already nosebleed valuations on Wall Street and chasing them higher, because there is no alternative. I think it's an artifact. It's there because, as you point out, most mainstream investors think of a portfolio as stocks and bonds, risk on, risk off, and you have some sort of balance. And if the bonds aren't working because they guarantee a negative return, right? Your bond's giving you 1 point whatever percent, inflation's 5%, bonds are broken. Who wants bonds? So that there is no alternative in that view, that narrow horse blinders mindset of stocks and bonds. Well, the bonds are gone. All that's left is stocks. There's no alternative. But that's an artificial view. Take off the blinders. Look at the world. Obviously, commodities are an alternative, and don't just have to be commodities. Real estate is a perfectly reasonable alternative. It's not a stock or a bond. But commodities in particular are, I think, worth thinking about, because if I don't have one handy, but if you look at those charts of the S&P 500 versus commodities, or the Dow versus commodities, those kind of stocks versus commodities charts, even with the recent increases in copper and tin and aluminum and other prices, gold and silver too, commodities are dirt cheap compared to stocks. They're still close to, those multi-decade lows, cyclical lows. So not only is there an alternative, that narrative on Wall Street, it's just FOMO in disguise. It's just people trying to be cheerleaders for, selling more and more stocks, chase these stocks, giving people a reason to chase the stocks. I think it's misleading. I think it's irresponsible. There are alternatives, and one of them, at least commodities, is quite cheap relative to stocks. And I think that's something investors should think about, not just gold bugs. All investors should think about that.
And I think one of the key elements of that is, one of the arguments against precious metals is that they don't produce anything. And I think one of the things is that, well, they've been a store of value for 6,000 years, and that's very important to have something that's just a store of value, not necessarily that's going to produce wealth. But even on the production side of wealth, right, there are the mining stocks that actually do produce wealth. So your perspective on that counter argument to precious metals?
Well, clearly the miners do produce wealth. They literally produce wealth. They dig it out of the earth and bring it to the world, which is, in my view, and it's not just gold, any miner, a valuable contribution to society, arguably much better than the latest hot app for how to do a makeover or something. But what you didn't include in there is that part of this criticism is that gold doesn't pay interest. It just sits there, the pet rock thing, right? And that's, I can kind of see it. But in a world where interest rates are normal, that criticism carries a lot more water. In a world where real rates are negative and even nominal rates are basically crappy, can I say that on TV? I think that criticism of gold falls flat. You know what? An asset that holds value, that's real, that is a long for which there is no short, for which there's no counterparty risk, that governments can't print, right? The fact that doesn't pay a coupon is utterly unimportant to me in that context. And it compares well to the real rates being paid by so-called other safe haven assets. So I think that criticism of gold being unproductive, just sitting there as a pet rock, is completely wrong-headed. And even on the most literal sense, gold is used in jewelry, and jewelry is an industrial use. It's not, well, in India, it might be more of an investment hybrid. But when you put gold into jewelry, a lot of it ends up going back in the ground or not back in the market. People don't want to melt down their precious family heirlooms. So that is industrial use. And there is actual industrial use. It turns out that you need a gold crucible for some of these fusion experiments. And there are other things for which gold is uniquely suited. It's one of the 92 naturally occurring elements that has unique chemical and physical properties. So does silver, which is a better conductor than copper, by the way. Right? So I think these arguments that they're not productive or they don't pay interest, I think they're just wrong-headed. Perhaps even deliberately obtuse.
All right. Well, Lobo, Tiggre, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where our viewers can find you online?
Sure. Well, I'm thinking about all these things, and the three topics we've talked on today, I have free articles on them. If you go to independentspeculator.com, right there on the homepage, you should be able to find articles on these three things. And if you want to keep up to date with my thinking, I do encourage everybody to sign up for our free, no spam, weekly digest. I promise if you sign up for that, you get one email per week with original analysis and insights, whatever value I have to share. We don't flood everybody with advertisements on a daily basis, that sort of thing. So check it out. I hope to hear from you.
Fantastic. Lobo, once again, thank you so much for your time, and God bless.
Thank you, Elijah.
This week's special with Miles Franklin Precious Metal Investments. 2021 Silver Krugerrands for only $365 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-45 4237.